this concept is a simple concept. Try to understand that. What is credit rating? It is rating given to a credit. Rating given to a credit. Now try to understand that. So this rating, credit rating is given to, it can be to individuals. Credit rating can be given to individuals, corporate or companies, and also to the government. To try to understand that people borrow fund, people take loan, or similarly the corporate or companies take loan, borrow fund. At the same time, government also. Try to understand that government at the three level, at the central level, at the provisional or state level, and even at the local. You might have heard about municipal bonds very recently. So even the local government also, local governments also raises fund. Now try to understand that whenever any individual or a company or a government, when they raise fund, they look into, especially the credit giver or the loan giver, they will look into their risk, credit worthiness. This word is very important, the credit worthiness. They want to know the credit worthiness of the borrower. What do you mean by credit worthiness of a borrower? It will tell you that how much risk is involved in it. You had seen that so many people taking loan and not paying back. Okay, so who will be the loser? The lender, the person or individual, the individual or institutions or a government who give loan, they will get affected if they don't service the debt or they don't service the loan. So in order to avoid that, there used to be lot of agencies, internationally acclaimed rating agencies, both at the international level and even at the national level. There used to be rating agencies, and what their job is, they give credit rating. So based on this rating given by these credit rating agencies, the lender or the institution which gives loan, they fix the interest rate. So this is a very important thing. The credit rating decides two important factors, whether you will get a loan or not. Whether you will get a loan or not. So in the case of individual, you might have known that there is a credit score is there. Those who are taking a loan, if you ask your parents, first thing a loan, if any bank, whenever you gives you a loan, first thing what they will do is that they will check your credit score. We have that CIBIL credit score is there. Now what is this credit score? It shows your credit worthiness. If you have a better score, there is a chance of getting loan is high. So one point is that credit rating decide whether you will get a loan or not. Second thing is that if you have a better credit rating, if your credit worthiness is high, naturally you will get the loan at a lower interest rate. So that's another key factor. So if you having better credit rating, you can raise loan at a lower interest rate. You can raise loan at a lower interest rate. Now here the issue in this topic is not about individuals or companies. We have dealt or will we deal it in a separate way. We already discussed this issue in relation to insolvency and bankruptcy court. This is one of the measures to tackle the bad loans. But in this today's session, I am more focused on the sovereign credit rating. This word is very important. Sovereign credit rating. So when you hear the word sovereign, it is credit rating given to a government, a sovereign body like government. So sovereign, what is the sovereign credit rating of India? So this rating will help. So this rating will shows, okay, what is the status of India. See, Indian government, you have seen that they borrow. Yes or no? The Indian government have, so it is not only about borrowing, it also shows to the investors, foreign investors who are investing in India. You had seen that foreign portfolio investors investing in debt instruments. It gives them an assurance that India is a credit worth country or not. By looking into the credit rating agency score, that will give a picture. So sovereigns, every sovereign country have been given a rating by there are mainly three international credit rating agencies. There are three major international crediting agencies like Standard and Poor, S&P. S&P is one international credit rating agency. Then Moody's. Then Fitch. So just have an idea, these are international credit rating agencies and they give rating to companies also, they give rating to sovereign government also. Okay, now try to understand that how they rate, what is the rating, what is the highest rating and what is the lowest rating, because I expect, because in many of the issue they will ask you, see, be very clear, what is the credit rating of India? What is the credit rating of India and where we stand, what is the present situation in relation to our credit rating agency. So before going to the India's credit rating, we will have an idea how these international credit rating agency rate, what is the highest credit rating and what is the lowest credit rating, and from there we need to know where India stand and where China stand, what is the difference between India and China and what will happen, and that is the issue which is covered in the economic survey regarding the sovereign credit rating. So we will see it, the highest credit rating, see, be very clear, note down regarding just the rating. This will be very much helpful also when you read newspaper. It is like this, okay, it's in letters. AAA, which is highest credit rating is given to AAA, then AA, then A, then BBB, then BB, then B, C, and the last one D. So highest ranking credit rating is AAA, lowest is D, lowest is D. Now try to understand that what is the rating given. So this is this rating will say that, okay, regarding AAA, if any, see, I am talking about sovereign credit rating, and try to understand that this ratings, try to understand that loan can be long term, medium term and short term loans. Now generally India's credit rating, from your examination point of view, long term credit rating is important, because in newspaper we hear or we see only the long term credit rating in relation to India's sovereign credit rating. There are, so for medium, for short term credit rating, the indicators are different. That's not important for us. What for is, I am talking about long term credit rating. Long term, normally sovereign countries take loan for a longer tenure, they take for a shorter tenure also, but from the examination point of view, what has come in the news and what is mentioned in the economic survey, it is regarding the long term credit rating. Now regarding this long term credit rating, what this AAA says that, okay, it's in relation to the, what is the timely servicing. So it says that it looks into this thing only, timely service of debt obligation. What do you mean by timely service of debt obligation? Loan is a debt. Loan means loan when you borrow or when you issue a bond. So try to understand, issuing bond, taking loan, all are debt obligation. What do you mean by timely servicing? What do you mean by timely servicing? Timely servicing means you are paying back the interest with principal on time. So if any borrower is paying back the loan on time, we say that, okay, this is what actually a lender want. Lender want timely serve, means the person who borrow pay back his debt on time. So regarding this timely service of debt obligation, each rating gives, see, regarding AAA rating, what it says that regarding this, any agency if any sovereign government is having AAA rating, what it says that it is having the highest degree of safety. This word is very important. In regarding that loan, you will be having, this term is for, what is that? It is providing highest degree of safety. Safety for what? For that instrument. See, instrument can be anything. It can be mainly, we take it as a bond. So if a country is having AAA rating, what it means that for that country which have taken loan, it is that instrument is having highest degree of safety. So if there is highest degree of safety, it will be having lowest degree of credit risk. So these two terms are very important. It is having lowest credit risk. So these two terms, just be very clear with it. Now based on this, AAA says that regarding any instrument, if it is having AAA rating, the safety is at the highest level and credit risk is lowest. Now when it comes to AA, it will be from highest, it will be a less, so safety will come down a bit. So we use the word high. See, now it's all technical. This term is simply technical. You try to understand that, okay, if AAA is having the highest rating, then AA will be having a much lesser rating, so the safety will come a bit low. So what the term says that AA means, here it is highest degree of safety, here what it uses, high degree of safety, and instead of lowest it is low credit risk. This term is very important. Credit risk is low. Now regarding A rating, that is below AA, it is adequate. The safety is adequate degree of safety, and regarding the credit risk is also adequate. This term, or you can say that, okay, we just make a very just small this thing is there. Regarding credit risk, here it is very low. Credit risk is very low, and here it is low credit risk. This term, be very clear with it. So regarding the credit risk, this is very important. Regarding the credit risk, AAA is having the lowest credit risk, AA is having a very low credit risk, and A is having low credit risk. So be very clear, lowest, very low, and low credit risk. So the risk is, as it moves down, the risk is increasing. Yes or no? The credit risk is, as we move down, the credit risk is increasing. And regarding the BBB, the safety is moderate. From adequate it has become moderate degree of safety. And regarding the credit risk, what it says that it is again, this word uses moderate credit risk. Moderate credit risk. And this is important for us. This is important for us because India's rating is in this grade. So be very clear regarding BBB. So India's sovereign credit rating is in BBB. There is plus or minus is there, we will discuss that, but for time being you understand that it is BBB. What it says that India's credit risk is moderate. So comparatively other three, India is having a moderate credit risk, Now when it comes to BBB, things changes. Instead of safety, the term changes. To default. That BBB says that there is a moderate risk of default in relation to timely service of debt obligation. So these are the four safe instruments. What is that? AAA, AA, A, and BBB, because it's talk about safety. Now from here it talks about default. There, instead of safety, it is saying that there is a moderate risk of default, and when it comes to that, say that there is high risk of B, it is high risk of default. In relation to timely service of debt obligation. So BB is moderate risk of default and B is high risk of default. And C, it is very high risk of default. C is very high risk of default. Moderate risk, high risk, and very risk. And regarding D, which is the lowest one, it is saying that either it's in default or it's going to be default. It's already in default or it's going to be default. Now try to understand that. These from here below B, they all, anything beyond B is considered as junk bonds. Any instrument, see these are all in, see this is the low, see these are all investment grade rating, And try to understand that among the investment grade rating, we are having the lowest investment grade, triple B. Now all, see if it is below triple B, that is from B onwards, they have junk bonds. We already studied what is junk bond. It is having credit risk is there, high credit risk is there, and normally for junk bonds we had seen that interest rate will be high. Okay. Now, so this is in relation to the rating. This is in relation to the rating regarding AAA, A, B, and triple B is very important for us. Now regarding this rating outlook, I will note down this regarding the rating outlook. Okay, rating outlook is very important. Now along to this rating outlook will be applied. What is the outlook of this rating? What will happen in the future? Rating outlook means what will happen in future regarding this rating. What is the rating outlook? Rating outlook can be three things. Either it can be positive, or it can be negative, or it can be stable. In the medium term, what will happen to this credit rating outlook? Outlook says that if anything to any credit rating, if plus is added, it says that the outlook given by this credit rating agency, it says that in future there will be an upgrade, credit rating upgrade. So plus shows that there is a chance of upgrade in future. So see, we have studied a different type of credit rate. To that, if there is plus has been added, what it says that in future this sovereign credit rating is going to be upgraded. And if it is negative, it says that in the long term, in the medium term, there is a high chance that its rating will be downgraded. So be very clear with it. Plus means future it can be upgraded credit rating. So what is upgradation? If it is triple B, it can be upgraded to A. What is the rating? Triple A, double A, triple B. So if it is triple B plus, what it shows that in future it will have a credit rating of A. Similarly, if it is triple B minus, in future it can be downgraded, and from triple B it will become double B, and it will lose that investment grade status. It will get the junk bond status. Okay, and what do you mean by stable? Stable means that projection outlook is that it will continue its rating. What is the present rating? It will continue. So plus means upgrade, minus means downgrade, stable means it will be stable for quite some time. Now regarding India's credit rating, now comes to our topic. What has happened? What is the issue? What economic survey have said? Okay, in the 2016, somewhere around the middle month, somewhere around September, first Moody came with a report, credit rating report regarding India. It says that okay, India's credit rating is BB minus. So India is having the rating of BBB minus, that is the lowest investment grade. It is the lowest investment. India is having the lowest investment grade. Below that it is junk bond status. Okay, and it said some reasons for it. The major reason what it said is in relation to low GDP, per capita GDP or low per capita GDP. We are having a low per capita GDP. Now this term is very important. The economic survey have criticized this thing. Okay, we'll come to it. This word is very important. So we are having a low per capita GDP. Second, regarding India's fiscal situation. regarding India's fiscal situation. It says that we are having a combined debt. We are having a combined government debt. Combined government means both at the center and state level. We are having a debt of 69% of GDP. Our combined debt is very high. So after Modi in November, Standard and Poor came with their rating. Standard and Poor also given India the same rating, BBB minus for the long term and A3 for the short term. So that leave that short term thing. Same thing, it is at the lowest level only in short term also. So and while saying so, it made a statement also, that's a very, which hurt the Indian government. It said that in the near future, it will be same, at least for the next 2 years. At least for the next 2 years, there is not going to be any changes in India's credit rating. This statement have been made by Standard and Poor in November 2016. After that, especially the Chief Economic Advisor Arvind Subramaniam have criticized it, and it have come explicitly mentioned in your first chapter in this economic outlook. It has covered in detail regarding the poor standard. This is the word you said. The poor standard used by these credit rating agencies while giving credit rating to India, sovereign credit rating to India. And what it said that okay, this statement was used in the economic survey itself. Okay, it said that okay, if you are going to consider this per capita income, it will take India, see any country, if any country, we are a low middle income country, for a low middle income country to improve its status, it will take half a century, that is 50 years. So you are asking us to wait for next 50 years to improve your credit rating if you are going to consider this low per capita GDP. So what I want to say is that this per capita, from your examination point, now try to understand, now this is an issue. What is, we now know that these credit rating agency will look into this factor. What is that? Per capita national income or per capita GDP while rating a country. So it's very clear, and this is one of the reasons used by these international credit rating agencies, especially Standard and Poor, while saying that we can't improve your credit rating now. So now it is clear for you that these credit rating agencies use this indicator, what? Per capita income while giving rating for India. Now you know that we are having a low per capita GDP. Now try to understand that while comparing yesterday's classes, okay, in relation to when we take into consideration the per capita GDP in relation to market determined exchange rate. Our per capita GDP is coming somewhere around $1,700. This is our per capita. It's approximate. Our per capita GDP is 1,700. But while calculating purchasing power parity, it is above 5,000. That's the difference. I'm not going to that part. Okay. But the credit rating agency is not looking into purchasing power parity. Rather, it is looking into the prevailing market determined exchange rate. They say that okay, India's per capita GDP is 1,700 and it's a very low per capita GDP, and in this situation we can't improve your credit rating status. Second what it said is regarding the fiscal situation. It said that unless and until the combined debt is brought below 60%, that's very important. The combined debt have to brought below 60% of GDP, then we will consider your to upgrade or not. So till this point of time, don't ask us to upgrade your credit rating. Then the government have made a comparison that they are not following consistent standard while rating India and China. Okay, so before going to a comparison between, so what it has done is, what this economic survey have covered, it's very important, economic survey have made a comparison. Economic survey have made a comparison, and this term is used in the economic survey. Now look into the factor of China and India. Look into the factor of China and India. Now India is having, take the case of Standard and Poor rating given to India and China. Now in relation to India, for quite long time we are having a rating of BBB minus. And try to understand that after this government came into power from 2004 onwards, 2014 onwards, our lot of things have improved. Lot of factors, like if you see it, the government after this government came into power, it has made several initiatives in relation to, we have constitutional amendment have been passed, GST have been passed, insolvency and bankruptcy code have been introduced. That's a very important thing. Then we have liberalized FDI. So many ease of doing business measures have been taken by the government. So what the Indian government says, and we are a country who are a fastest growing economy. Our economic growth have not come down. So what Indian government says that these factors have never been looked upon by these credit rating agency. Rather they have looked upon indicators like per capita GDP, which is very difficult for a low middle income country to improve its stat. It will take time. It's a low moving indicator. It will take time to improve its indicators like per capita GDP. At the same time, when in relation to China, this is economic survey says that in 2010, China's credit rating have been upgraded. China's credit rating has been upgraded to A+. From China's credit rating have been upgraded from A+ to AA. Now what is the China's credit rating now? AA. China's credit rating is AA. When this credit rating has been upgraded in 2010. Now you know that especially in the last few years, what has happened? China during 2010 was growing at a double-digit growth rate. China was growing at 10%. China was growing at 10%, and now it is growing at 6.5%. China earlier used to grow at 10%. Now it is growing at 6.5%, and it has not downgraded China's credit rating. At the same time, in the last 2 or 3 years, Indian growth rate, and there have been lot of improvement in our macroeconomic indicators, and the credit rating agency have not considered. So this is what India says, that okay, the credit rating agency is not following consistency. The credit rating agency is not following consistency in giving credit rating to different countries, especially China. So why I have discussed this, because it is covered in our economic survey. Now try to understand that there is a difference of 6 grade. There is a 6 grade difference, which is very important. There is a difference of 6. 6 means plus, so you add minus and plus. We are at BBB minus, and China's is at AA. So this again it is said by Arvind Subramaniam that there is a difference in relation to credit rating between India and China. A 6 grade difference is there. China is above India in relation to credit rating. There is a 6 grade difference is there. This word is also very important. There is a difference of 6 grade in relation to India and China. So this is another issue which the economic survey have covered. So what I am trying to say is that okay, in relation to credit rating, what Indian government expects and recently just in March 2017, the organization OECD have also supported India's stand. OECD is not only a organization, it's also a think tank, where it said that India deserve for a upgrade, and rather it also said Indian government to continue its reforms, and naturally it said that once you continue the reforms and try to address the issues which they have said, that naturally then you will get an upgrade. So if you look into this point of view, why Indian government want upgrade? So if you notice one thing, just relate everything. Indian government want an improvement in ease of doing business ranking. Yes or no? Indian government want this international credit rating agency to upgrade India's credit rating. Why? Reason is India is a country where it requires lot of investment. Okay, and investment, look into factors, several factors. One of is that the investment friendly behavior of the government, and you have seen that the present government have took several initiatives which attract foreign investment to our country, including foreign direct investment. But at the same time, so this is showing if there is any upgrade in the credit rating, it will increase the investor confidence. It will increase the investor confidence in our country. And one more thing, we have to say that, okay, we have to look into the credit history of Indian government. We have to look into so now there are few criticism regarding this credit rating agencies, international credit rating agencies. So you need to understand why we require a credit upgrade. Now what is the criticism is that if you look into India's credit history in relation to default, we have never made any default. What all loan we have took till now, we have paid on time. So India is one of the country, even though our debt is high, we have never defaulted on our loans. But several developed countries have defaulted. You had seen that in the case of several European countries defaulting on there, and those defaulted countries still having a better credit rating than India. That is again another grievance of India. Okay, and another criticism what India Arvind Subramanian has said is that, okay, these credit rating agency have given the highest credit rating to all the US mortgage loans in 2007-8. You might be knowing that the major reason for the global financial crisis of 2008-9 is the result of US subprime crisis. It means that, what is that in the US, the housing loan, those people who have taken housing loan, they have defaulted. You know that what this credit rating agency have given the credit rating for these loans? They were given AAA rating, highest credit rating have been given. So to the highest credit rating given to these, I am not talking about sovereign, I am talking about the debt instruments. It got defaulted, and now several state government, where, see, now try to understand, they were bailed out by the government. Now many state government in the US is taking an action against Standard & Poor and Moody's against giving a highest credit rating to these mortgage loans. Now try to understand, so the epicenter of this 2008-9 global financial crisis is one of the reasons for this crisis, that these credit rating agency could not able to forecast this crisis, and they have given a very high rating to these mortgage loans, which later on defaulted. And try to understand that after this mortgage crisis only, it spread throughout the global and it resulted in a global financial crisis. So this the credibility. So by saying that, okay, they have given a poor rating, means their rating was not up to standard in relation to the global financial crisis, that is this US mortgage loans, they have given a higher rating. Then when it compared to they have not looked into the India's credit history while dealing with giving credit rating. Third is that it has given more importance to per capita GDP than other indicators while giving credit rating. Now try to understand from your prelims point of view, these factors, this question you can expect regarding the difference between India's and China's credit rating. What are the two major indicators taken by the credit rating agencies while giving this BBB minus ranking for India? I am telling you two important indicators which unfavored India is in in relation to per capita GDP and India's fiscal situation, that is in relation to the government debt. That is, now it is around, even though it is a fact, but it is a very important fact. It is above, that's near to 69 or 68.5% of GDP. That's a combined debt. And what they want this debt to brought down to below 60%. I am expecting these two core points if a question comes, and they can ask this the rating scale. Now, since sovereign credit rating have been in use quite some time, and India's ranking have been given, they will ask you for which is the better rating, which is having a better credit rating in relation to India's credit ranking. Okay, so if there is an upgrade, what will be the ranking India may get? These are all possible questions in relation to this sovereign credit rating, and try to understand that it's not only an important current affair, it is clearly mentioned, it is an important topic in the economic survey under chapter 1, and it is discussed in detail in relation to comparing India's sovereign credit rating in relation to China. I'll just give you a small material, there's a boxes there on economic survey, I'll just send you a photo, you please go and read it up. Okay, so that's regarding the sovereign credit rating.